We begin with another warning that a global downturn is looming, which could see fewer new jobs, smaller household budgets, and a drop in corporate profits. That's according to the International Monetary Fund and the World Bank, which held their annual meetings in Washington this week. A recession in major economies isn't for certain just yet, but business activity is slowing to a crawl. Now, in its annual World Economic Outlook, the IMF said global GDP growth will decelerate to just over 3% this year, and even less than that in 2023. That's down from more than 6% last year. In major economies, IMF officials project a slowdown across the board. That's most pronounced in the US, where GDP growth is on track to come in at 1.6% in 2022. Last year, that number was at 5.7%. And as incomes go down, inflation will stay elevated. The pace of consumer price hikes in most economies is expected to stay near record highs over the next year.
2023 slowdown will be broad-based, with countries accounting for a third of the global economy expected to contract this year or next. The three largest economies, the United States, China, and the euro area, will continue to stall. In short, the worst is yet to come, and for many people, 2023 will feel like a recession.
Now, that slump will have dire consequences, with tens of millions of people potentially falling below the poverty line. Central banks in rich nations, led by the US Federal Reserve, are raising interest rates at their fastest pace in decades. As a result, investors are diverting trillions of dollars in financing towards safe assets that are denominated in the greenback. That leaves fewer resources for developing nations to support their own economies. Let's hear from World Bank President David Malpass.
The global environment, as you know, is very challenging. In fact, it's grim for developing countries. I think there's a crisis facing development. We put out our poverty numbers last week, so showing 70 million more people in extreme poverty and median income going down by 0.4%. That's the first decline in the records that the World Bank's been keeping since 1990. All of the problems that people have taken note of, the inflation problem, the interest rate rises, and the cutoff of capital flows to developing world hits the poor hard.
Now let's go to Taha Arvas. He's an economist and an adjunct professor of finance at Boğaziçi University. Great to have you back with us as always, Taha. Another day, another warning of a global recession, it seems, this time from the World Bank and the IMF. Do you believe that a global downturn is inevitable at this point, and when might we see one?
I think it is, unfortunately, very much in the cards in the very near future. If we go just by the US figures, we saw both consumer price index and the PPI, the producer price index, increase this last week, which means the US has not yet begun to feel the recession, which also means the Federal Reserve will hike interest rates more aggressively in the coming weeks, and markets price that in. But we got a warning from the head of the ECB, Christine Lagarde, who said that markets are not correctly pricing in what's going to happen in Europe, which means they also are going to be very stringent in increasing interest rates. So what do all these things mean? It means borrowing will be more expensive. It means your credit card debt will increase, or at least the payments on them will increase. And all of these things will, these central banks are actually trying to slow the world's economy. And that means recession. There's no other way about it.
Well, that's right, because despite the negative impact on growth from high interest rates, as you pointed out, the IMF says central banks should essentially stay the course and continue to raise rates in order to rein in inflation, saying that the world can't afford runaway inflation. Do you agree? Should inflation be fought at all costs, even if it does mean a recession? Which is worse, higher inflation or a recession?
That's a good question. And that is the multi-trillion-dollar question right there. Can economies withstand a long period of time, long periods of recession? And if they can, then, or at least a short period of recession, if they can, then no problem. But if they can't, if that's going to cause more damage than long-term inflation will, then I think we have other problems. What I think is going to happen, ultimately, the central banks are going to change their definition of what is acceptable recession. Currently, it's 2% for the ECB and the Federal Reserve, but I think soon, probably in the next 6 months, we're going to hear that number change to 3 or 4%, because it doesn't look like it's working. The Federal Reserve has increased interest rates several meetings now aggressively, and yet inflation continues to rise.
Now, the IMF chief has pointed to slowdowns in the world's three major economic regions. The US because of high interest rates, Europe because of higher natural gas prices, China because of its own housing affordability problems and its ongoing strict COVID-19 policies. Which is doing the most damage in terms of growth, do you think, out of all of that?
Right. I think the China story is the most interesting, only because of these zero COVID policies that China has. It's actually a benefit to global energy prices. The Chinese aren't moving around as much. They're not producing as much. That hurts export prices in general. People are looking for alternatives, but it also helps oil prices. Imagine if China opens up completely tomorrow without any restrictions, then we're looking at a major spike in oil prices. That's going to cause real inflation that we haven't yet seen because China has been so slow to reopen. So on the other side, you mentioned these other things. The Russia-Ukraine situation is causing Europe to have these spike in natural gas prices. I mean, these are all things that affect each other, which is interesting. But I think we have yet to feel the full brunt. Winter has just arrived of what's going to happen, and I think we're going to, in a few months, you know, I hope I'll be back in December, and we'll talk about this, and then we're going to see a major. The story's going to completely change by then, unfortunately.
And I know this question might take a while to answer, but in a snapshot, what do economies, big or otherwise, need to do in the face of a potential global recession?
Well, I mean, politicians answer to their citizens. So every politician has to look out for their own citizens, their electorate. What can they do best to make life easier for their citizens in the very near future, the midterm, and the long term? And I don't envy anyone's position, any politician's position. But it's a tough job, but somebody's got to do it.
Okay, Taha Arvas, we'll have to leave it there. But thanks for sharing your analysis with us, as always.
My pleasure.